So, for those tuning in, of course, thank you, everybody. I'm Hunter, the community manager over here at Arbitrum. I'm joined today by Mikey, a co-founder of Vesta Finance. And just very small intro. For those who don't know, Vesta is actually a layer 2 first stablecoin protocol that allows users to obtain maximum liquidity against their collateral without paying interest. Mikey, how are we doing? Was that a good little small blurb there? What do you think?
Yes, sir. Right on. You got it right on.
There you go. Awesome. Well, I'm gonna stop with the explanations there. I'm actually gonna let you go ahead and, if you don't mind, maybe give us a little bit of a background on yourself, and maybe more of an explanation of what Vesta Finance is, if you don't mind.
Yeah, sure. So, a little bit about myself. I am I would say the product and business development product lead and business development co-lead at Vesta. So I deal a lot with protocol design, partnership, and initially a lot of marketing as well. But we've been able to onboard Vestator, who's in the audience, who's been dealing with a lot of the marketing stuff as well. He's been great. And a little bit about Vesta. I think that's what everybody is here for. So I'll dive straight into the topic here. Vesta is, in its current form, a collateralized debt position platform, collateral debt position platform. So it's similar to think Maker, Liquidity, Abracadabra, and so on and so forth. Except like our host was referring to earlier, Vesta is positioned to be strictly on L2 at the moment, and our home is Arbitrum. This is where we started the project, and this is where we will be positioned going forward as well. Yeah, so that's kind of a very high-level overview of what Vesta is. I think it would be good to have you maybe ask just some more targeted question, and I can help you and the community answer with,
yes.
Yep.
Of course. I got a ton of them. Thank you for that, actually. So then, actually, I think what would be really nice to just start off with are maybe just some of what makes Vesta a little different from protocols that some people may already be familiar with. For example, I kind of referred to it as a stablecoin product or protocol. Is there a difference between that and like a lending protocol or anything of that vein?
Mm-hmm. Yeah, so I think different from lending protocols, stablecoin protocols like Vesta, we effectively increase value in the sense that we create money out of, I guess you can almost say, thin air, versus usual lending protocols. The borrow and lending side, you do have to those assets are supplied by the users, and so people have to supply assets. People have to effectively borrow assets that were supplied by other people. But collateralized debt position protocols like Maker and Vesta, as well as Liquidity and Abracadabra, the form of loan is created in the form of new money that has been effectively created out of thin air. However, that sounds a little ominous, but the way that I would like to think about it is that it is, if you think about commercial banks, right? When you're mortgaging a house, commercial banks effectively create money out of thin air. They are a very strong contributor to the money supply, and collateralized debt positions protocol like Vesta serve as a similar serve in a similar role. We effectively let people collateralize assets, and then we help you create more value out of it, and so therefore you can utilize the newly created value. And compared to, I would say, Maker as well as I would say the strongest comparison you can draw with Vesta would be Liquidity. Um, Liquidity is currently only on Ethereum mainnet, and you can only collateralize Ether. But with Vesta, what we can do is we enable people to collateralize not only Ether, but we have a more flexible approach to, um, I guess, collateral increasing or to the variety of collaterals that we can support. Currently, we support not only Ether but also RAMBTC, which is a alternative, I would say, a more decentralized um, asset compared to WBTC. And we also support a couple fellow Arbitrum projects, their governance tokens such as DOPEX, GMX, and most importantly, we support our one of the our I would say the closest partner that we have, which is Olympus. We support Geom from the get go. In fact, right now, Vesta Stable is heavily collateralized by Geom. I believe 60 to 70% of all Vesta Stable actually come from collateralized Geom. So yeah, that's kind of a quick overview of Vesta.
Beautiful, yeah, and I think it's I think like right off the bat there, we're definitely going to go into a bunch of different topics later on relating to it. But like people in the crowd can already definitely tell that you guys are very integrated with not only the projects in the Arbitrum ecosystem, but broader as well. Like for example, like the Ohm thing is pretty cool too. I didn't even know that. um, are you able to go maybe then more in depth about the actual tokens associated? So we have a VST as well as a VSTA. I'm not even going to try explaining either of them. I want to give you the floor for that one, like the utility behind both tokens, I should say, and what users can do with them.
Yeah, so there's two tokens. The naming is a tiny bit close at the moment. We're hoping to revamp that quite soon, actually. So VST is the stablecoin of the ecosystem, which is the token that you would get for collateralizing, ETH, or BTC, all that good stuff. On the other hand, we have VSTA, which is short for Vesta Governance Token. Vesta Governance Token is the token, well, similar to a lot of protocols of this nature. You would usually have a stable coin first, and then you will also have a governance token. So this is something that we have inherited. Vesta's governance token in the future, not right now, you will be able to stake it and earn a share of the protocol fee. We're hoping to roll that out in V2 of our protocol, which is coming quite soon. We're expecting that in roughly the end of, I would say, September. We can dive a bit deeper into that if Hunter, if you allow.
Yeah, if you want, we can go ahead and talk about V2.
Yeah, sure. So we have a pretty, I would say, um, I would even say ambitious, but just a relatively brand new protocol um, that we're currently building. There are a couple prominent features that I can mention quickly. First one would be the cross-chain capability, the inherent cross-chain capability. So one of the partners that we're working closely with is Connext, as well as Nomad. We're utilizing their infrastructure to enable cross-chain minting of VST. So while Arbitrum will be our home, we do hope to expand to other ecosystems to capture, more revenue, to increase the footprint of Vesta Stable. And so one of the easiest ways for us to do that is to enable, or I wouldn't say the easiest, but rather one of the most interesting way to achieve that at the moment that not a lot of people have done is to enable the to enable collaterals to be collateralized on one chain and then have VST be minted on another straight onto another ecosystem. So that's something we're exploring. Um, the next feature that I'm really excited about is permissionless collateral. Effectively, a lot of the due to the fact that um, all these CDP protocols have a stablecoin, and basically all the risk is aggregated into the stablecoin itself. Um, Protocols usually generally take a very, I would say, conservative approach when it comes to listing new types of collateral. And so, what we have, what we are currently devising is a model that would enable people to effectively um, collateralize anything. Like they will be able to mint VST with any type of collateral. And we're also formalizing a governance process to decrease the threshold of requirements in order for you to increase the capital efficiency of something that is previously permissionlessly listed. So, for example, say that you just created this token. Let's call it Dogecoin or Dogecoin 2, and it's not yet quite been proven and so on and so forth. But with Vesta, what you can do is you can just supply to the liquidation engine, and from there, if you are guaranteeing the liquidation of this new type of collateral, then you would be able to list this collateral as a type of as a type where you can mint VST from. So from there, we can go through governance processes to decrease this stringent requirement, such as capital efficiency and so on and so forth, to make it more capital efficient and to mint from this new collateral. So that's another quick feature. That's another cool feature that I'm really excited about. I might have gone on a little bit too long there, but those are the I would say the two really cool features that I think V2 will carry V2 into a much larger product.
Great. Yeah, no, I'm glad you brought up those couple points up because those are obviously very innovative things. I mean, like yeah, like you mentioned, like the makers and whatnot of the world have been around for actually quite some time. So to see something of this magnitude being developed is really cool. And I do actually have a question or two about both of those actually. So for example, when we're talking about like allowing new types of collateral to be kind of added on there. You know, is there any I guess from the team's perspective, any added risk from doing that? Obviously, it seems like the cost benefit there is that you have higher capital efficiency, but is there anything like on the other side of that where it's like, okay, maybe we're doing more of this, but we're getting less of the other thing?
Yeah, I think that the way that we're approaching offsetting the risk when it comes to people listing permissionless new collateral is by ensuring the liquidation and ensuring the oracle is safe. So we're taking Euler's approach with Oracle, which is we have to ensure that the Oracle comes from a safe environment, which is going to be it has to be Uni v3. It has to come with certain setups and so on and so forth, just so that we're making sure that particular attack vector is minimized. And additionally, when I was talking about ensuring the liquidation, what I meant was you will technically have to um, ensure liquidation by putting in capital. Um, so currently, if you were to um, liquidate people on Vesta, you have to deposit your money into what is called a stability pool. So this is a concept that has been inherited from Liquidity. The stability pool is super good at what it does. Effectively, it liquidates instantaneously without relying on external pricing sources and so on and so forth. And but the caveat is that it's not as capital efficient. People have to put up money at this at put up money at all, effectively deposit it into a pool, and this pool is going to wait for position to go underwater and then liquidate it instantaneously. So with permissionless collateral listing, that is going to be what we will require people to do is that they will need to fund this stability pool with sufficient capital. Um, and on the other side is that we'll have to limit the amount that could be minted from this new type of collateral. Um, so, it's not exactly capital efficient, but this opens the door for, all kinds of assets to be collateralized. And this is kind of, you can see it as a starting point, right? Like any collateral, they could be listed onto Vesta, and then from there on, that's the starting point of the journey. From that point on, they can go on to governance, and start proposing, increasing or rather decreasing, of certain ratios, thus increasing the capital efficiency, all through governance. So that's something. I hope that's a pretty good overview of what it looks like.
Yeah, no, that was great. Thank you for that. And I mean, I just think it's worth kind of diving into, the intricacies of some of these like newer models coming out because like as a user, frankly, like all this stuff is just magic, right? You see kind of it's kind of like that whole like DeFi 1.0 and DeFi 2.0 kind of craze that was going on like a year ago or so, where it's just not that protocols that existed prior, like are inferior by any way. They just like have just different types of products that are built differently. So it's really cool to see
Yeah,
how new ones are being built again, like Vesta.
yeah, yeah,
So I
yeah.
think the other question that I have on the V2 stuff before we move on is you also mentioned the first thing was actually being able to put collateral on one chain and then mint VST on another ecosystem. And this kind of what was going to tie into my next question anyways. But nonetheless, I think so to is I mean obviously the future is going to be multi-chain, right? I think even as like me being on Arbitrum, I think it'd be a little premature to say that there's only going to be one exchange, one layer or one chain in existence. So with that being said,
Hmm.
like with VST being able to be minted on another chain or another ecosystem, what are going to be the differences that one may see using Vesta Finance on another chain versus Arbitrum being its like home base?
That's a great question. I think it does come down to the benefit of using these private monies. And in the current form, I think a lot of these private monies offer the benefit in the form of yield. And so it would come with a fair bit of challenge when it comes to liquidity management. Um, if we are going, well, obviously we are going cross chain, but at the same time, with new VST being minted onto a brand new different ecosystem, there needs to be correlated, there needs to be supporting, I guess you can say, ecosystem variables, right? That enables it to be useful. For example, it needs to have supporting liquidity pools. It needs to have sufficient bridging infrastructure. It needs to have. We would go as far as saying that it needs to um, be. So we need to support it on those ecosystems so that these stablecoins can be converted back into collaterals and so on and so forth. Um, so I don't have a very straight answer um, for your question, which is what is the direct benefit of using VST over another form of money. But that will definitely come with time, right? Like we're doing all these, we'll be developing the ecosystem variables, like I mentioned earlier. We'll be doing the integration with exchanges to facilitate onboard, offboarding, and so on and so forth. All those things are, it's there isn't a magic bullet to solve all these issues, and now all of a sudden, everybody's just going to use VST, but rather I see this as a marathon of, building business cases, building the supporting ecosystem, and making it into something that people truly want to use.
100%. And it's like you said. I think like almost any product in crypto that has like a long term use case, like it's going to be a thing where there are going to be use cases for like for VST or whatever other token, like whatever ecosystem it's built in, like over time. And it's not necessarily, I guess, like your job to know what that is. It's going to be the ecosystem's job. Like, hey, look, we want to build a product either surrounding this token or including this token, and I'm sure it'll be the kind of thing where it's like you wake up one day and it's like, oh my God, this is this really cool protocol using VST. We had no idea. Let's talk to them. And I feel like
Yeah, yeah, exactly.
yeah, and that's the cool part about crypto, right? It's not a thing where everything has to be so formalized right away and things are kind of talked about in advance. It's the kind of thing where people can just start building and that's it. You know.
Yeah, that's right. That's right. Fully on board with that.
So if I may follow that up with another question, why L2 first?
I think I think that a lot of value will flow to L2 due to due to the cost, right? Like it's just a very straight answer for a. I would say it's a very simple question because things on L1, although it's much more secure, it's much more costly, and users in the end they do not want to think about those hard issues such as securities and so forth. So we want to position as the L2 stablecoin. I think that the one of the challenge that we have seen is that it is very like money is very fluid, right? Like it flows in and out very, very quickly. And so what happens is we have positioned to be L2 first, but at the same time, we're definitely also exploring, you know, capturing, like what are the ways to capture um, more value into the protocol. And that basically means that we might be going to mainnet sometime soon and capture value through there as well. I think the even though all these ecosystems, obviously, there are much superior user experience compared to the other ones. For example, I believe Arbitrum has the best user experience out of all Ethereum-based ecosystems. Um, but I think as a protocol, we in order for us to be successful, we also have to be flexible in terms of capturing other um, other pies, right? And so we want to make sure that people know us as the place where you can collateralize without paying a lot of a lot in fees. But at the same time, we also are mapping our kind of roadmap in a way where we want to facilitate the highest amount of protocol growth. Yeah.
No, yeah, 100%. And I think you guys obviously at Vesta have been doing a very, very good job at that so far, especially on the front of collaborating with different partners within the ecosystem, like the Arbitrum ecosystem, of course, and kind of boosting not only I guess you could say like maybe TVL and growth, but also just promoting like your own kind of social and marketing there. So if I were to ask, what kind of ecosystem partnerships have you guys done, and what did they entail, and what's the result of them essentially?
Yeah, so we actually have a lot of partners, all within the Arbitrum ecosystem. I think Arbitrum is most definitely, I would say, like one of the best decisions that we've made is to launch on Arbitrum and focus on supporting players within the Arbitrum ecosystem. Um, I have a list here actually. I'll just run through them real quick. But to start off, we have integrated very closely with Chainlink. We use their oracles on Arbitrum to support majority of our assets, ETH, BTC, um, as well as Geom. And when it comes to Arbitrum collaborating with other Arbitrum native protocols, the two most prominent examples are DopeX and GMX. So, um, as some of you may know, you can collateralize these two tokens on Vesta, and we're also exploring collateralizing further, other tokens within those ecosystems. The most prominent one being GLP from the GMX ecosystem. Um, so going beyond these two projects, actually, before I move on, I do have to mention that we also are trying to list VST as a type of collateral into GMX, into GLP. So, so we want people to use VST to mint GLP. But that has proven to be somewhat of an uphill battle. The guys at GMX are, very rightly so. They want to protect GLP security, so it's very understandable. So going beyond these two projects, we're also talking closely with other Arbitrum projects such as Umami, Spirax. Um, we're hoping to Spirax is actually going to use VST as a type of token to mint their own stablecoin, which is called USDS. It's a very cool project. I suggest all of you to take a look at it as well. Umami, I think it's quite a famous Arbitrum native project. They have this new product called USDC Vault, and we are in the process of listing that as a type of collateral to mint VST as well. I think it's going to be a very popular product. It's a delta neutral vault that provides upwards of 20, 30, 40% APR. And last but not least, we also are talking closely with Zigzag. Zigzag we're working with them to list VST as a type of as a denominating token for some of the trading pairs in that ecosystem. Zigzag is an order book based exchange, so it's slightly different from Curve, Uniswap, all those automated market makers. They take a more traditional approach, which is order book, and they've seen a lot of success on ZK Sync, and they're not attacking, sorry, but they're deploying also to Arbitrum now, and we are now going to. So there's a lot of things in the pipeline, right? We're talking to a lot of projects, we're working with a lot of projects, and hoping to deepen the utility of VST as well as supporting these projects as much as possible.
That's great to hear, and it's even better to hear that there's no shortage of potential partnerships going on with you guys there. I do have one question actually, primarily on the partnership surrounding Spirax that you guys are going to have. So I think like a lot of people would probably look at Spirax and Vesta and be like, okay, those guys are competitors, right? They both have stable coins, so two different options for different people. Like obviously, you're not looking at it in that perspective. I'd love to hear a little bit more about kind of your thoughts behind collabing with other stablecoin protocols, whether it be Spirax or another one.
Yeah, I think that it really depends on the method of collaboration. I think the most prominent example in our case is Frax. We've been able to utilize the Frax ecosystem to bootstrap the initial liquidity of VST. we still are, right? Like the VST token, Vesta stable token is currently paired with Frax on Curve as a factory pool. That is where you would primarily trade VST. Although there is also a balancer pool, which for those of you who have been in the pool, apparently the APR is 300% just from fees. So if you guys want to take a look, um, that'd be quite. It's been quite an interesting a place to trade VST for sure. And so, with that in mind, I think using Frax as an example, so they've seen massive success. Sam is someone I personally look up to. They push out products like they eat lunch. So it's we've been able to basically in a way almost piggyback off of their success, right? Like we utilize their VE FXX ecosystem, and some of their partners, some of our angels, Tetranote in particular, have been able to utilize the VE FXS ecosystem to help VST bootstrap liquidity through voting for yield through FXS. So with Spirax, how I see it play out is it's going to become a liquidity sink for VST because USDS provides pretty handsome yield at in the current phase as well. So for those who are who dig around enough, they'll be able to find ways to go from whatever asset that they currently hold, may be GMX or ETH, or on their side it may be USDC and so forth, and find a way to structure a profitable strategy. And that is that to us is effectively synergy, right? We these type of collaborations, um, although I would say it's not 100% always like that. um, it really differs on a case by case basis. So I guess the point is, um, I would say that in the current phase where everybody's trying to grow, stablecoins, there's not too much competition and so forth. We're all trying to help each other, but it definitely, uh, it's definitely important to take a look at take a look into the details and see how it's working, whether it's in or against the project's favor.
No, that is definitely great to hear because I think finding spots where you can have those different collaborations with whatever project it may be is always going to be like a net positive for both parties. So the more you guys grow, the more the other project grows, the better it is for the entire ecosystem, frankly. So that's great to hear. I think
Mm-hmm.
yeah, no, exactly. I think we can also move on actually to one of the very exciting initiatives you guys actually currently have going on, the VKey program. Do you mind giving us a little info on that?
Yeah. So we were super excited about Arbitrum Odyssey, and we wanted people to vote for Vesta and so on and so forth. But unfortunately, I think our fan base just got completely demolished by some of our dearest competitors, and unfortunately, we didn't get a spot on Arbitrum Odyssey. So our community lead, Vestator, he said, okay, you know what? Why don't we just do our own? and and we thought, okay, this would make for a pretty fun side project. Our development is mainly focused on our development for V2 is mainly um, the resources is mainly occupying the smart contract team, and we have some resources that are basically idling, right? Like we have some design resources, we have some front end resources, and we thought, okay, we have these resources lying around. Why don't we take the time to actually create an NFT project? And so that's exactly what we did. The original intention was to be exactly in line with the Arbitrum Odyssey, um, which is basically what we where we launched. I know that our Odyssey has been delayed because we have a much better infrastructure incoming that will be able to facilitate this program much better. Um, but for our program, because we actually require people um, to put their capital in the protocol for a while, so there's this time element to it. So it doesn't pose as much of a risk to to the ecosystem. So we thought, okay, you know what, we'll just push ahead with it and let people get some NFTs. So that's exactly what we've done. The NFT collection is three what we call V keys, which if you're keen, you can you basically use you basically run through the whole user journey of using Vesta's product to acquire these NFTs. And these NFTs, this is a bit of an alpha, but basically you'll be able to utilize this in the staking program in the future. And that's something so basically, these are not just pointless JPEGs, and you do have to there are some uses to it. And it's been a super fun project, and I hope that for those of you who are interested, please go on our website and go to our Medium and take a look at how to acquire these cute little NFTs, and join us in the Vesta Empire.
Very, very exciting. And by the way, as for what it's worth, I think it's so cool to just to see projects again like Vesta, kind of like just literally taking the idea, running with it, and making it your own thing. Because it does look like a really great idea again, just to kind of get used to the protocol and add utility actually to it as well. Um, I think actually a question that kind of comes out of that, at least from my end, was, and I guess this is more of a broader question, is NFTs and just collateralization. Is that something you guys have thought about before? Is that something you guys are thinking about? And I know it's kind of like a big topic nowadays, like using your NFT as collateral. But liquidity and all that other stuff sometimes kind of gets in the mix there in terms of what may be holding it back. But I'm interested to hear your thoughts on that. Just using NFTs as collateral.
Yeah, I think NFT as a type of collateral is definitely interesting. I think um, we've seen some projects who've been fairly successful in that regard. We know PUSD, which is JPEG, uh, and then there's also Bent DAO, which is utilizing, I think, a lending protocol infrastructure to create, and they've been able to absorb, I think, like upwards of 100 apes into the protocol. So these are all really cool fellow projects that are exploring this collateralization of NFT idea. Ultimately, I think for us, the most important question for a protocol to have an answer on is whether it justifies the business use case. And I think in the in the in the near future, where NFT market gets heated once again, these particular use cases will become very um, they will become really big protocols, basically push BendDAO and JPEG to become very popular. However, for a protocol like ours, I think we want to, for any projects really, you're facing the problem of prioritization, right? You have all these things that you want to build, but at the same time, you only have so much time. So, we basically are trying our best to service the current use cases, the current business cases that we have targeted. And once we kind of have executed on them, and then we once time frees up, that's when we actually start looking into something. I would say it's quite different, right? Like in this case, it would be NFT collateralization.
No, yeah, I mean, and you know what, and that definitely makes a lot of sense. I think that's actually it's actually a very good point, especially within crypto. I mean, like number one, I think almost every project is hiring, so you can never have enough people working on a protocol. Like, I guess you could say that. Yeah, number two, it's like I definitely see what you're saying. Like, does it make sense to iterate on what we currently have to make sure that like we're doing the best we possibly can in that front, or do you want to start building new products that I mean, NFT collateralization is definitely a new product. That's definitely for sure. So that makes sense. And apologies on the little tangent. I just that was in my head. When does the V key program in that case like when does it run until? If you don't mind me asking.
Yeah, yeah. So it starts. It started a couple days ago. It started on the 4th, and we are letting it run until the end of the month. You do have to note that for those of you who are interested in acquiring it, please do note that um, you have to be in the program for 7 days. You have to hold the position for 7 days. So if you were to um, create a position in the last 7 days, you actually won't be eligible. So that's something to keep in mind. Um, yeah. So how many days are left? I think roughly 17 days left to create a position. And just leave it in there for a week, and you'll get yourself a nice little V key NFT.
Awesome, awesome. Yeah, great to hear. So then I think other than V2 because I know we kind of spoke about that earlier. Uh, it'd be nice to kind of see what else is on the Vesta Finance roadmap. Like what's kind of coming. I mean, or actually probably worth like probably worth also hearing what you guys have recently kind of launched, if anything, and then yeah, what may be coming in the future.
Yeah, so we are looking heavily into effectively, we spend a lot of time on um, making the lending experience better, right? So that's um, the biggest focus of V2. But at the same time, the token, the stablecoin, isn't going to just run on its own. So we're also working on expanding the use cases of VST. And something that we're super excited about is a deep integration with a project called Mover. Um, Mover is a company based out of the UK, and they effectively allow anyone to send money to an Ethereum address, and from that point on, that that money becomes spendable on a credit card or a debit card. I think it's just a card. It doesn't matter the definition at this point. Um, so so that's something I'm personally super excited about. What we're working on with them is a end-to-end user experience where you as a user um, don't have to think too much about creating a new vault position, adjusting your collateralization ratio, taking it out, and then paying things back once your collateral has depreciated too much, adjusting your vault, all that. So we're devising a way to effectively simplify that whole user experience, so you don't have to think too much about it. You just send some of your current collateral, send some of your I guess you can say any type of collateral, and from that point on, you can use that as a type of kind of you can almost say that you're collateralizing those things without even thinking about collateralizing them at all, and then you would be spending VST um, instead of spending your collateral. So that's something we're super excited about. Other stuff that we're exploring is off-chain yield. This is much more far-fetched. I've been fortunate enough to meet some people who are very connected, and they've built projects that are actually bridging into the real world, bridging DeFi yield into or rather off-chain yield um, into the on-chain ecosystem, and that's something I'm super excited about as well. I think if we're able to solve real world financing needs, and then have VST as a denominating currency in those transactions, I think that's going to create a lot of native demand for the stablecoin, for the protocol, and most importantly, we're financing, um, uh, you know, real world assets and real world deals. Um, yeah, that's something else that we're exploring, but that's relatively earlier, I would say. It's still something in the early stage. So yeah, those are a couple things that we've been exploring.
Wow, and it's funny because earlier you said that like so many different things you guys could do that you don't really have the time. Now I get it. You have multiple, like literally like multiple different things going on, which is very nice to hear that you guys are kind of buckled down to building in the bear market, as they say. And like it's all utility essentially from here on out. Essentially, is what it sounds like.
Yep, right on.
So before we go on to community questions, I did want to ask you one kind of final question here, more of like a general thought, just about stable coins generally. So for those in the audience, if you have any questions for Mikey over here, get them ready. We'll bring you up shortly. But so for you, Mikey, what are your thoughts on what makes a stable coin sustainable? And very broad question, but this is kind of just in the vein of what's been going on generally with newer stablecoins coming out, and kind of some older ones kind of collapsing, for lack of a better word. Um, you know, is it the collateral that backs it? Is it the algorithm that quote unquote backs it? What are your thoughts on that?
That's a great question. I think I have kind of 2 points on this. I think the first one is um, people like yield, so they either want to hold USDC, as it's people know that it is backed by dollars. Well, technically treasury, but some dollars as well. Um, so that's the first point, right? Like if you want to get into a alternative form of private money that tracks US dollar in value, there must be, I would say, a attractive enough kind of factor to pull people in. And so far, and in my opinion, into the foreseeable future, that attractor is going to be yield. So sustainable yield is something that is going to be um, very important for making a stablecoin sustainable. And then the second point is um, utility, which kind of something that we've touched on just now as well. But not only utility in the sense of yield, but at the same time utility in actual utilization, such as onboarding from centralized exchanges, um, utilizing it as a source of spending power, as is the case with Mover. Um, yeah, so to summarize, yield and um, I would say a convenience-driven utility.
Got you. Yeah, no, and I that definitely makes a lot of sense, especially that last part too, right? I mean, it's like like what makes like the U.S. dollar so valuable? Well, probably the fact that I need to pay like everything, using that dollar essentially. That's part of it, at least.
Yeah,
Um,
exactly.
yeah, so that's definitely actually a great point. I don't think I've heard that on any other podcast. So I'm happy you mentioned that here. All right, great. So I think we can take some questions from the community. Let me go ahead and check, see if anyone has their hand raised. 1 second. I should also mention, by the way, that for anyone who did join late, this is actually going to be put up on YouTube, shortly. So if you did happen to miss any of the AMA, you'll be able to rewatch it there. And actually, this Twitter space should be recorded too, so you can just rewatch it on here as well. But I don't think we have any hands raised currently, so we can actually probably end off with one last question I have for you. If one does want to, take part in Vesta Finance, be part of the community, contribute in any way, what would be the best way for someone to do that?
Yeah, I think our website would be a good starting point. From there, you'll find links to our Twitter, our Discord community, our documentations, and so on and so forth. So our website is vestafinance.xyz. You'll also be able to find us on Twitter by searching the username Vesta Finance without a dash, so just Vesta Finance. We do post updates very frequently, and please join us in our journey to build the next biggest private money.
Awesome. Love it. I love it. Especially that enthusiasm there right at the end. That's a great call to action.
Yeah, that's right. That's right.
Man. Well, thanks everyone for listening and joining in today. Again, make sure to visit their website and Discord, join their community there. And yeah, Mikey, thank you again for coming on.
Thank you, Hunter. And this has been a great pleasure. And I hope everybody here enjoyed this chat and learned more about Vesta. And feel free to reach out to me via DM. Feel free to reach out to Vesta account via DM. Join our community and so forth. Thank you.
All right. You guys have a good one, Mikey. You yourself. Thanks.
Thank you. Bye-bye now.